Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, June 13th. Michael Boutros on the line with you. Iman's in the house. Jay, Kamal, Mark, Paulo, Pete, and Peter. Ziad, great to see everyone here in the room. So, to close out the week, quick reminder, Jamie's going to be doing his midweek strategy webinar after me here at 11. So stay tuned for that. Good morning, Iman. Great to see you. On the menu for today, DXY, still in a precarious position, just above support. We came into this near-term slope resistance, and we're kind of just holding that right now. I think it's a little more upside to go, so we'll take a look at those levels. Same thing on the euro. I'll tell you a funny story about a position I was in on the euro in just a minute. Aussie, dollar CAD, dollar Swiss from last night. Circle back to the Kiwi that we were following earlier in the week, coming into some support, just a bit lower. Gold breaking out of the near-term downtrend, but not really getting much momentum. So we'll talk about those levels as well. Pete, I got you on the SPX. We'll hit crude on the back of this headline that we're getting today with regards to some of the crude tankers being attacked, charging a nice little rally there after a false break yesterday. So we'll take a look at those levels. We'll glance at sterling. I don't know if you guys are trading it, but it reacted to near-term slope support last night. So looking at it with great interest. And silver. We were talking about that on Tuesday. I remember who brought it up. But we'll definitely take a look at those levels. I haven't had much time to really work it, but near term does look like there are some levels coming up to take a look at. All right, well, guys, if any other questions or trade setups, as always, feel free to throw them on the message board at any time. Let's jump right in. Here's DXY. Real quick look at the weekly chart and where we are. Again, that basic slope support off the low that we made in September of last year. It's a 3-point touch, 4-point touch if you count this one. We're trading there right now. Okay, so the weekly close here is going to be important. If we close above that slope, you have a little bit more room maybe for the recovery to climb. If we close below it, again, the biggest level we're looking for is the objective yearly open 96.14, and that converges beautifully on the 2018 slope. So the levels are pretty clear as far as what we should be looking at heading into the weekly close tomorrow. DXY in the daily. 618 retracement of the March advance is what we kind of bobbled on. Now we closed below it on the 7th here, but we gapped higher into the open of the week, and we've basically been holding it since. Here's what it looks like on the close basis. It's just that single daily close, but then the pullback found support right there. So we still need another daily close. We haven't gotten one yet this week. Okay, but we still need another daily close below 96.75, 96.73 to get this thing going. And again, 96.13 is just a soft target for the 618 retracement of the entire yearly range. 96.14 is going to be that yearly open. So the levels are super clear. Just need some momentum here. How you look to effectively, get into a position here, you'd have to see some sort of recovery or some sort of exhaustion high before you start to fight it. Here's what it looks like on the intraday chart. So the ideal scenario, again, there's a couple things I was looking at. So if you take a parallel of this slope and extend it off this level here, couple things. First, you have the actual median line for the pitchfork. Now we didn't touch pitchfork support. We didn't come off pitchfork resistance. The 50 line gave us a nice rebound here, but there's not much. We haven't gotten too many inflection points yet is the point. So you have this near-term slope. This is just the weekly open for the dollar index off the lows from last week and this week, a parallel caught this week or extended off this week's opening range high right there, converges on the median line like right above 97, like 97.06. And then the 38.2 of the decline from the high that we made here into the close of May, that converges on that slope, a parallel of the same pitchfork, a little bit higher, right around 97.16. So, maybe a peak above 97, test the Friday high, pre-NFP, test slope, be a certainly nice area if this is going to fail. Another thing that you can consider is a measured move off the low here, puts the 100 right there, 97.06. And you can see that the 618 has offered inflection, break and acceleration, and support. So the levels are like outstanding. Okay, we just need to see a little bit more of a jackknife if we can get up into here or here, one of these two levels of interest for possible fades Above 97.16, I wouldn't mess with it. If we clear Friday's high, if we clear that parallel, if we clear that 38.2, we're probably looking at a bigger recovery, maybe towards the upper parallels, maybe for a 618 tag. Okay, so that's sort of our bearish invalidation level. But right now, we're looking for possible exhaustion off one of these two levels. Also note that here's your weekly open, right? We gapped higher, we almost filled the gap, a couple of pips off, and then we broke through the weekly opening range highs. So if this is an opening range high break, we should be looking for a Thursday, Friday high. Could happen today, could happen tomorrow, but here are the two levels that we'd be looking for possible exhaustion. Okay, immediate support, soft support, I'd call it, still 96.88. Big level to break below, we talked about it just a minute ago, 96.75, 96.73. That's that larger 618 confluence with the lows that we made back in April and that slope. So another break below that, another close below that would certainly get the momentum running for DXY. Any questions on this? Don't forget tomorrow we do get U.S. retail sales. That's on tap. Industrial production number is not so much of a major market player, but the University of Michigan, sentiment index. That's the preliminary one for June. Comes out at 98. Previous read was 100. It's a little bit softer. Not sure that'll be the trigger, but that's sort of the scenario here for DXY. All right. So if there are no other questions on this, let's run right through to the euro. So this thing pissed me off so bad yesterday. Here's where we stand on euro as of last night's update. Literally, I got into a short here on Tuesday afternoon, just below 1340. It was 1336 entry. It was really nice. Looking for the pullback. Literally into Wednesday morning on that last spike, I had a break even stop because I played it a little bit too short to the chest. Man, that's exactly where I was short from. And instead of leaving the high against, or instead of leaving the stop against the high from the previous week, which is what I had on entry, I woke up in the morning and I choked up to break even. It stopped at break even, then tanked. It'll happen. So we're sitting here at support. We're still tempting a break of this level. I told you 112.90, if I'm not mistaken, for the downside target there. But here's what it looks like now. Okay, we're still sitting right there. A quick reminder of where euro is on the weekly chart. Okay, calling this a breakout any way you slice it. Basic channel resistance off the 2018 March highs. You also have basic channel resistance off here, which we're basically testing right now. If you look at it from this standpoint, like this, right? Either way, you're checking that now either way. And it's a defense of longer-term slope support for the pitchfork we've been following from 2015, 2017. There's the parallel on a closed basis. Doesn't get much cleaner than that. Okay, so the longer-term structure is bullish, and I think Jamie's got you guys on the right path there with looking for the pullback for entries. For me, short-term guy, it was actually a great opportunity to get on that short. From here, you want to use caution. Here's the daily chart. Yep. So the level of which, or yesterday I noted in the report that we posted an outside day reversal. Now, typically, I tell you guys this all the time, typically these are bearish developments. It matters where it happens. So it just so happens that this outside day reversal didn't come off the extreme high. It didn't come off even the monthly high. And I'm not going to take this as sort of like the end all, okay, that we're going to just reverse lower. So long story short, from here, you still could get a deeper cut. 1265 is kind of the extreme. I don't want to see anything lower than that if this immediate advance has legs. That's the former opening range highs and actually the former high from May, okay, right here. It also converges right on this median line. Now I'm looking at a different slope on the near-term chart, just taking off these lows. So just as a quick reference there, but just to show you that multiple time frames, different slopes are all highlighting the same levels. So 1265 is kind of what I want to see hold on this decline if this immediate advance has legs. Even if it breaks this, it would still be we'd still be treating this as a correction. Okay, we came off of long-term slope support, was a really nice move. Um, and as long as we stay above 1186, basically we're still constructive on this. Here's the near-term chart. Hey Pooja, great to see you. Hey Mike, I just got here. A look at Euro Kiwi for a short break of London OR. Euro Kiwi. Okay, we'll take a look right after this. Haven't taken a look at that in a while. Great to see you, Pooja. So Iman says I'm short from 1333. Yeah, that's basically where I was short from. Um, really nice entry on that. This is the first area I'd start to look. Okay, the slope has been decent. The 50 line catching resistance, the lower 25% line catching support, the break giving acceleration. Here's my problem with this, you know? So for my short that I had, that got stopped out right here, this was my first limit was right at the weekly opening range lows. So I would have been out at 3/4 of the position at 1290. We're sitting there right now. So look, it doesn't look all that constructive. I wouldn't be too concerned, man. If you want to shave a little off, probably a good idea. Stops to break even or better, probably against the Asia high would be a decent play, just to play it close to the chest. But if we travel lower from here, I really don't have anything till 1251, 1256, which is why I'm hesitant to tell you to bail on it. Because if you get the break, there's still a nice stretch to the downside here for another 30 pips or so. So keep that in mind. Okay, this is just the Friday low. It's the exact inverse of the DXY, right? The Friday low, a 38.2 of the near-term advance. There's a 38.2 of near-term decline in DXY, both right here. Okay. What other assistance could I offer on this? Yeah, not bad. Then use that high, converges on that slope basically into the close of trade today, open of Asia. Maybe even the high from the opening range high from last week. It gives you like 113, 113.05, 113.07, and want to see price hold there. Okay, don't work with this slope. It's too early to rely on it, but just something that gives us a little bit more of a tell on where we are in price. So by all means, by all accounts, we could be at a near term. This doesn't want to copy for some reason. Oh, wrong button. We're at a near term support structure. So just watch this level here, Eman. It says already closed half at 1387. Well done. Rest is break even. Naughty market has that stopped you out. Yeah, Eman. I mean, yeah, sometimes, and let it be a lesson to you guys. After all these years, you still make these errors in playing it too tight. I'm constructive euro. I think it's a larger breakout. So therefore, when I take a counter trend position, like I'm looking to play the pullback within the uptrend, I tend to be very conservative with those trades. So the second that we start to get a little bit of a stretch to the downside, I'll typically just throw it to break even and leave the first limit, tick off a small position of it if it hits. And I actually encourage you guys to do that. Defensive trading is always the best way. It's the long haul game. It's not the short game. But on a trade like that, I just should have looked at the time frame. I closed it. I moved that stop to break even like right before the U.S. Open, and literally on the U.S. Open is when it spiked into that stop and came right back. Let it be a lesson. Again, you're always learning when you're trading, no matter how many years you've been doing it. So looking for some sort of reaction here. Again, a downside move, 1251, 1256 is your next target. Look to see if we clear that 1317 level again. I'd probably just look for resumption. The bigger levels on the upside, again, we'll move them over on account of time for this slope. It's still going to be 1375. That's the 786. The bigger one is 1393, 1394, and that's going to be the 618. And similar to the DXY, just to show you, here's 100% extension. Forget that 618. Just another reason why this may be kind of a trigger area or pivot area. Okay, if we break lower, we should see acceleration here. Okay, that's Euro. Pooja, was that you wants to look at Euro Kiwi? Let's take a look at Euro Kiwi. Well, this is our setup from last week, if you guys remember. What did the last Euro Kiwi setup look like? Right here. Here was our last time that we talked about this. And wow, did it play well? I hope someone took advantage of this. We can't get all of them, but this was a great one. Combo, please, for the DXY for Ty. Here's DXY combo, sir. And here's Euro. We good? And here's Euro Kiwi. You got it, my man. So Euro Kiwi, what a beautiful trade. Thanks for bringing this up, Pooja. So remember last week, we were following the turn from resistance right off the bat. This is the weekly chart. We noted this was the objective weekly opening range. We had slope resistance here, 618 just higher. So basically looking for 72 into 73, 100 pip range of resistance. That ended up being the high, okay? And we turned lower from there. The daily chart had the focus after we broke below the objective yearly open to look for a drop into 69.13 into 69.08. Really beautiful spot. It was defined by the 2018 open, which has been an objective pivot in price, and the 1618 extension of the decline off the highs. So you had a nice confluence region there. Price registered a low at 69.10 on the dot. We were looking for 69.08, 69.13 before rebounding. It was a big old reversal candle. And the intraday chart, again, even had near-term slope in that zone. Well, what happened? It dropped, it broke this slope. We dropped right into 69.10 and just ripped face. Okay, and we're now testing, went all through these levels, we're now testing 72. Here's what it looks like on the intraday chart. There's 72 as resistance. Whoop, as resistance, breakthrough. And we've been straddling it since the start of the week. It's now still a pivot in price I'll be watching. But just goes to show you, guys, sometimes the technicals are just freakishly clean. And a lot of times these crosses have really, really nice setups in them. So look, let's clean this up a little bit, Pooja. This slope, really fruitful, downside. There's the break, we can drop that. This retracement's null and void, we've taken off the high. This retracement's null and void. We'll stretch that to the new high. Whoops. 618 caught the low, 2018, okay. High day close, we got a new high, so that's not the high day close no mo. All right. I'd be looking for a new low here. And by new low, I mean literally for this last stretch here. I'd be looking for a new low to complete some sort of correction if this is going to be resumption. Because here's the thing, Pooja, if this is a breach of the month of the yearly opening range highs, that could be a hallmark exhaustion trade. We close just above it by a couple pips, then we rip and close well below that close the following day. That reversal candle scares me. The fact that 72.01 is again holding resistance here today makes it a little hairy. Makes it a little hairy. You know what? Let's leave that previous high day close on there, actually. If we just dismiss that FOMC move there, something like that, anywhere in this range, I'd be looking for stronger support. But from here, I don't necessarily think it's a move, Puja. A short into a break of the London OR. Let's look at near term, shall we? I mean, he definitely have a very clean London OR. I'll tell you that. The opening range for London um, is pretty clean. Yeah, that could be a play. That could be a play. Um, and I didn't note that you're actually noting on the short side. Yeah, the short side is how I would play it from here. It could listen. How do I say this in a way that makes sense? If this is the end of some sort of advance, five-wave advance, which is debatable at best, um, this could be the start of a bigger decline. But for now, I would treat it as a simple pullback with an uptrend support. So that's why 71.26, 71.45 levels I'll be looking for support on the downside if it does give us that move. A break of the London OR would be the way I would look to play this. Is your London opening range low? That's the 430 low. So this might be even taking into account like the pre-market hours, but that's a decent range. I'd be looking for a break. Your stop would need to be 72.10, so it'd be pretty tight. Um, and I would just be looking for a new low. You know, whether it's 71.45 or 71.26, you're at that point you're over 40 pips in the money anyway. So scale out as you get down there, but that's the way I would play it. If we clear this high, you had an outside. Well, it wasn't an outside, but let me see what the 1 hour looks like. Almost. Okay, you did have a 2 hour reversal, outside reversal candle. Off that high. And again, that 72.01 levels, guys, is just a simple January swing high, which is very darn close to that May high, right? The May high actually registered at 71.97 or something, so we were like 3 pips off. But you get the picture. So yeah, I would think that then the risk is for another pullback. Those two levels I'd be looking for as support. If we break there, 70.40, 70.68, these are objective levels, the 618 of the advance and the yearly open. But I wouldn't get too aggressive on it. I do think ultimately we have some more upside here. Does that help? I was looking for a counter trend short into 71.30 actually. Right on. That's right in the range. Great minds, Pooja. Great minds. Well done. All right. Love to hear the trade ideas, guys. Even something that we may not have been focusing on here. Maybe there's a great setup that is going under our nose. So feel free to throw those ideas out. All right, let's jump back into the schedule here. So that was Euro Kiwi number 3. Number 4 from last night, Aussie. So Aussie is, by my estimation, coming into support. We turned just pips ahead of support last night. Here's what the chart looked like. Whoop. Here's what the chart looked like last night. The level that we were sitting at last night was 69.26, and I told you guys to look for a reaction there. If we got the reaction, it's a pivot that should take us pretty close into 69 or 68.95, basically the 69 handle. So we got the break. Remember, this was our bullish inval early in the week. So we got the break. First target got taken out. Got a little wobble there. And the secondary move in overnight is exactly what we were expecting. Obviously, the Aussie data for employment came out. So don't forget about that. Kind of obviously shook things up a little bit. But unemployment rose to 5.2 from 5.1, so that was obviously a miss. The employment change came in a little bit better than expected, but the broader kind of metrics were a little weak. Okay, you got labor force participation rate dropping to 66 from, I'm sorry, it came in a little bit better. 65.8 was the expected, it came in at 66. Long story short, when we see that kind of reaction, and especially when we note that, guys, this is an objective monthly open, it's a 618 ratio. It is also the objective monthly opening range lows. So certainly from my standpoint, a break below 69.26 should have fueled acceleration. And did we get it? Yeah, really nice move. Okay, now here's the issue. Limits were at like 69 handle. We just missed that by a couple of pips. So do you hold a short if you're still holding it into the US Open? I hate to be the guy just to watch gains evaporate because you're too stubborn it didn't hit your limit, extreme. So be prudent. If we start to see this momentum start to creep up on these, hourly 2 hour charts back above, you could get a rally back into that open. This should be resistance if we're still heading lower. My personal assumption is it still could make another stab at this and find a larger recovery. Um, and if we close the week back above the monthly open, that would change and sort of refute this decline. That said, we've broken uptrend support and we're now testing near-term downtrend support. So play accordingly. If this break is legit and there's more downside to go, that's fine. But near term, you're coming off of support here. 64.25, 64.26 is what needs to hold as resistance if there's further downside on this immediate stretch. Bearish invalidations right back at that level of support that we talked about earlier in the week, which is 69.57, 69.60s. Questions on Aussie? Again, a quick reminder of where Aussie is on the weekly charts. Longer term, we came into a huge region. Okay, we've been talking about 70-20, 70-42 since the yearly open. Why? Because it was the yearly open. And it's also the 50% of the yearly range so far. So we sat on it, we bounced, we tested. The break was a gap. We filled the gap and moved lower. That turned right ahead of the 2016 lows, 2016 low day close or low week close. And where'd the rebound fail? In that same zone. So it's really make or break for Aussie over the next couple of weeks. This is kind of it either needs to refute this recovery and just collapse again, or it needs to hold support pretty close by and start to mount a counteroffensive here if we're going to move higher. Questions on Aussie? All right, that is number 4. Number $5 CAD. A beautiful trade this week. I think Jamie nailed it on the entry there. Here's Looney. So our, early in the week, we were looking for, as we were opening, we were looking for support. Here was the first, or I guess we had an update before that even, right? Here's the weekly open. So we were talking about the fact that we gapped lower into the weekly open, but the main region of focus was 32.58, the 618 of the range. Big level. You had downslope support in that region, and while we gapped lower into the open, price never posted a close below 32.58. So again, a break of downtrend support. This is kind of fast forward from where Aussie is, guys. Just look back to what we were just talking about. Right? Aussie's broke that uptrend support and now is testing downtrend support. This thing broke earlier and it actually responded to downtrend support. So on this recovery, we're looking for failure ahead of 33.56. That's last month's low. That's the median line of the pitchfork. So again, fast forward. First, into the start of the week, we bobbled back above that 618. We got the top side break. We said, great, keep looking higher. 32.20s is what I was looking at here. Obviously, the slope came in later, 32.30s. And then 33.56 was going to be that low. That's going to be the level where we're looking for exhaustion. So fast forward to last night, and here we were right below that 33.56 level. So it's turning, right? I don't know if we're going to get it. It is, well, I'm not in this just as a disclaimer. I'm still thinking that you could get that final push higher into the close of the week, just on account of the range break for the weekly open into 30.56. But largely speaking, Jamie, on the swing side, we're already short. So, yeah, I mean, I think we get failure. I'm looking for failure. The only thing that's not on here that I was looking at earlier this morning when I was kind of reviewing this is the retracement, and I wouldn't want to put it on because it's making the chart real messy. But look where the 38.2 comes. So even if we're going to get a basic 38.2 of the just near-term drop from last month's high, you'd think it would stretch into 33.60. Long story short, we're looking for exhaustion. Okay, downside targets aren't changed at all. You're still looking for a 32.58 reaction. That's 618 key retracement. Slope, depending on how far out we get, is going to come off one of these two levels. So first 32, an objective level, that's the 618. And then the 786 retracement, this is an extension. 786 retracement comes in at 3175. Can I get the combo again? I missed it. Thank you. Yeah, Ty. So dollar CAD has been clean. This week. Finally clearing this godforsaken range. So again, here's the weekly chart for dollar CAD, and I put it in last night's update as well. Really longer term implications here. So this is the basic slope from 2012. You guys remember that? It was super ugly last year on this. We sailed through it. Super ugly, or excuse me, 2017. Even last year, okay, we kind of bobbled it. But then this year, all of a sudden, we opened the year and markets started respecting it. And here we are again on a closed basis. It looks like a perfect bounce. So sure, give some back. Ultimately, we're still looking to play the follow through on the break lower. 3050 is a longer term target. That's all contingent on 3435 still holding resistance on any post test. Any questions on dollar CAD? Looking for topside exhaustion here. All right, that is number 5. Number 6, close to what the abomination is looking like. Dollar Swiss actually started to make a little bit nice of a move here, and it looked pretty clear into the start of the week. So recall again, our setup on dollar Swiss just into the open of the week, we were looking at a consolidation pattern, very simple. It was right at into slope support. It was straddling a 618 retracement, which was the 99 handle, 99.02. And the weekly open came in at 98.92. So it was a nice little zone there, and we had a nice consolidation pattern. So a simple trade setup, as I noted to you guys, look for a topside break. I gave you a range break here, either above 99.25 to give you the breach and breakout trade, or below 99.25, and 98.60, and below that, you'd look for the corrective bounce or the corrective breakdown into yearly open support, Fibonacci support, right? 98.30s. So, I mean, here's how it played out. We saw that consolidation pattern break to the upside. We came back, tested consolidation resistance as support. That held. On the advance, slope parallel off the lows, extended off the high, saw resistance. So on this one, the pullback found support exactly as we were looking for. So we came right into 99.20 as support. That's what this pullback did, and look at the reaction we're getting. Now, similar to the year, I mean, they're all the same picture, guys. An outside reversal candle here off the weekly high, move lower. Now, this is just obviously a 2-hour outside reversal, so I don't want to look too much into it. But if that suggests that this was the extent of the advance, we're not going to make it into that 99.60 target. The break below that same key region is what would set the onset. So 98.92, 99 handle essentially right here. Sorry, I'm a little anal retentive there, getting it perfect. But that's the range, okay? This is what would suggest you're looking for 98.30 again, okay? If you're looking for new positions, first of all, if you're holding a short, you should have a break-even stop or a stop just above that high, and you're banking on this break here at 99.21. If it holds, same zone where we were talking about earlier in the week, 99.60s, 99.70s, where I'd start to look for possible failure. If we're going to continue to hold this downtrend off the May highs. Questions on dollar Swiss? I know a little bit of an interesting setup here. Break even already set, says Paulo. Right on, man. Well played. Well played. Range a little bit tighter, right? So you don't want to go break even too quick, depending on where you got in. But yeah, it looks like a decent reversal. I mean, the 2-hour reversal off the high does look good, but Yeah, I put this on the same scales as dollar yen, so expect the unexpected. Nice move though, Paula. Any questions on Swissy? That is number 6. Number 7 is Kiwi dollar. And here's what Kiwi looked like on our last update. It was early in the week. Again, I always provide the link for the previous update, guys, whether it was a day ahead or whether it's a couple of days ahead. Here's what it looked like into the open of the week. And our basic focus was, look, this thing marked pretty strong divergence, turned just pips from that 66.84 target, and we had slope rather holding really, really well. So into the weekly open, we said, look for a pullback. Now, I only was looking for like 66 and look for a larger reaction there, but obviously the market had something different in mind, okay? There was the reversal from the weekly open. We just simply collapsed. 66 didn't hold long. That's right here. This is a new 38 too that we added later, but a 66 is right here. We sat there for a couple hours before breaking even lower and testing slope support. 65.82, that was our near-term bullish inval. It's certainly shifted the focus lower. 65.58 was the next downside target. That's the 618. Bearish invalidation 66.25. Well, we moved lower. And here is the 65.58 target now. Okay, right on cue. So I have Kiwi at support. I was looking at this morning. Looks like it's marking some near-term divergence, but does that mean I'm willing? Does that mean I'm willing to buy it here? Not necessarily. I do want to see a reaction here today in U.S. trade. Downside break, there's nothing until 65.25. Low day close comes in at 65.20. So really nice, a really nice spot if it breaks down. But I'd be remiss if you're not holding a short already. There's nothing to do trying to press a short here. This is a clear and objective pivot in price. Just look to the left. Not something you want to short into. And if we do get the break, it's probably going to be accelerated. So you're not going to have much time to try to jump in. If you're holding shorts, bring your stops in and let it go. If 65.58 breaks, maybe take a little bit off here if you want to play it safe. But if this breaks, like I said, I would expect to see a bigger drop off. Long story short, this is at a support pivot right here. If Kiwi's going to rebound from this decline, this would be the first spot to look. Fibonacci support, slope support, former swing highs, former swing lows. Questions, comments, concerns on New Zealand dollar? And I was just messing with this morning, by the way, guys. You're gonna have to stretch this down every time we make a new low. This retracement has no merits yet, but once we do base, or if we do have a reversal candle or some sort of divergent trigger break, then I'd start to rely a little bit more heavily on this. But as of now, I'm just going with price. All right, so that's all the FX crosses I've got on the menu. Before we jump into the commodities and some indices, really quick, I guess let's just touch base on sterling. It's been out of our focus for a while, guys, as I think it's warranted. But remember that slope? I don't know if we added it on Tuesday or Monday. I just wanted to highlight that we just came off it. So even near-term upslope support, which again, this slope hasn't been all that impressive. Came in just above the weekly opening range lows. It looks like that held. Point being, what I want to say is sterling, the setup that exists right now in sterling is a simple break of the weekly opening range, which is taking shape just below the yearly open. That's the only thing I've been looking at since the start of the week. 127.54 is the yearly open. That's objective yearly open resistance. The weekly opening range low comes in here. You're basically looking for a break of this range for near-term guidance. If your downside break happens, this is just a soft target we're looking at for the initial pullback, so I wouldn't necessarily bail on it there. But there's a risk obviously for a bigger washout to the downside. But the fact that the monthly and weekly opening ranges are taking shape just below the yearly open tells me that we'll probably get a decent directional bias break here in some point over the next few days. So keep your eyes peeled for sterling. I'm not a big fan of it right now. Obviously, the Theresa May um, exit, offered a little bit of volatility here, but there's just so much uncertainty that I don't think market participants really want to push this thing either way to right now. So it might be a lost cause, but just keep an eye on this, because if we do see a clear-cut break of this weekly opening range, and more specifically the monthly opening range, but on the immediate front, the weekly opening range, I do think we'll get a little bit of a definitive play here. Any questions on sterling? That is number 8. All right, number 9, gold. Here's gold. Very provocative, I want to say. So this ended up being a 618. I don't know why I took that off. This ended up being a 618 recovery, and this is what's concerning me right now. So again, a quick look back and a reminder of our last update here on gold, and this is what we were looking at. The ideal play was a 1316 bounce for a hold there for the recovery. But we noted that, look, if that 50% at 33 breaks, it's probably going to be a breakout. We broke above it. See that we're failing here a little bit. Not really divergence. I think those are equal highs. Slight divergence. Actually, that's a decent signal. Price action with a slightly higher high, the oscillator with a slightly lower high, but both of those reference points below 70, so that's actually a decent signal. Eman says, I'm short at 1336, but same like you, not sure what it's doing. Yeah, I mean, I would say that's a I don't want to say safe position. There's no such thing as safe trading, but I would say that's a good argument you can make. The high close for the year, I told you guys, 1341 was sort of my line in the sand to mark resumption of the uptrend. And the only thing that concerns me here is that we broke downtrend resistance. Great. We saw the accelerated move. Great. On the pullback, you saw that hold former slope resistance as support. Great. But then this and failure is not really what you want to see. And you start to get concerned that this could be, just the onset of another kind of reference point for a slope like this, right? Maybe a modified, kind of still look for that dropper, that bigger drop towards the weekly lows, towards the median line for the larger formation we've been following. I don't want to get all suggestive, and again, this is all like if and all that, but looking at this, that's my initial concern with trying to get too aggressive. Sorry guys, trying to get this back to original. There we go. This is what we were looking at earlier in the week. So yeah, I would have a pretty tight stop on that. Look, first thing you would want to see on this one would be just a test of that same slope again next to swing lows. If we break below 1327, which was a clear cut pivot, that was the initial support that we were looking for on the pullback. If we get through that, I think you're good for a 1316 tap. Just my humble opinion, man. But it needs to pick up the pace. I just don't like that momentum is completely flatlining. You never got a weekly opening range break. Here's your weekly open. It just tanked. We've covered the range, and now we're sitting right slap in the middle of the range. So like literally in the middle, because here's the 50% retracement. We're literally sitting right there. So not the best positioning from a extreme standpoint. Like we're not near an extreme either on the weekly range high or weekly range low. So I like where you're at with the mentality. Look for that median line. If we get below a break below that low that the swing low we made yesterday, I think you're all right. If this fails here or you find some sort of recovery again, it might be just worth it to bail on that. I always appreciate your opinion and take it into my consideration. Cheers, man. I appreciate that. Anything I can do to help. All right, and that is gold. So an interesting move on this breakout, but we're still holding the weekly range. I would think you get a little bit of a correction lower here first. Here's SPX, Pete. Man, those levels just keep playing out. It's insane. So again, the SPX levels that we've been following. Here's SPX. The previous update was on the 10th. As we were opening this setup, we were noting that the 764 literally was like almost a perfect resistance tap. So look lower below that. We went for another spike there and failed. The move lower saw a pivot and test last night of this zone. Okay, now obviously in slope and in time it came out to here, but that zone is 128.68, 128.71. We registered a low just below that at 128.66. So look, this is your immediate focus range. This is your immediate focus range. So a 29.14 break is what I want to see, give out to shift the focus higher. The targets are clear in that scenario at 29.30 and 29.42. But I'm of the mindset still, Pete, that this thing may look for a deeper correction. And that would be with a break below 28.68, which is what I typed to you earlier when you were asking. If this breaks here, I do think there's a room for a drop towards 28.41. What else can I say on this? Just the objective range of where it turned is so clean. Again, your 2019, so this year's high day close, it was also an outside reversal candle off the highs of the year. So big level, 786. It was exactly 29.10. We were looking at the 764, playing it a little bit closer. So 29.05 is where it came out. But you get the picture. I'm going to go ahead and adjust this actually. Let's just stick with the one that held perfectly, 786. Okay, chokes that up a little bit. So watch for initial resistance still here. Whoops. This is still the breakout zone. 29.30 to 29.42 is your initial targets. If we break here, Pete, I think you're sort of in trouble for a deeper cut. And again, this is something I'm just showing you now. If and when this does happen, if you do get this break, this is what you want to use. We can't use it now because I don't know that this is a concerted high. I have no way of confirming that. But if it starts to break lower, do watch that ahead of that 28.41 target. 28.48 would be correctionary if it's two equal legs. So we could make all the assumptions in the world, and whether you want to, if you want to bring up the fundy side of things here, that's also an argument you can make. But that's sort of my idea here with SPX. I still think you're a little bit of a risk for a deeper setback well below this region. Pete, does that help? He says yes. All right, cool. In the last call, you advised that look at the reaction on the key levels. It reacted. So how do we look at it now? Abby, which one? At this level here, right? So the way you want to take 28.68, I got you. Yeah. So the way you want to take my levels, Abby, is everyone's playing it on a different. Everyone's got their own way of approaching these, right? So for example, on the initial update that we were talking about as we were hitting resistance, the previous one, right? Where was it? Here. We're noting that this was a yearly opening, yearly high day close. It was a Fibonacci retracement. So right off the basis, from here, you're looking for exhaustion. You're looking for short positioning. You're looking for a spike high to get short, and then this would be your initial target. Now we have to always, formulate or react to different movements in price. So as this thing came in and made another attempt at that region, it failed. It posted an outside reversal candle off there. Even if you were to take a stop anywhere in this region, your stop against the high is pretty tight. Your first target is looking for here. Maybe you missed that move, Abby. I hope you don't mind me calling you Abby. It's Abhishek, right? Let's say you missed that move. No problem. As you get into this region, you're looking for a reaction. Okay, so you might be looking for the exhaustion trade to play the long. If you are, then in that scenario, you're looking at like a 6-1. Whoop. Right, just going to zoom this in for you. In that reaction, let's say you missed this decline and you played the long from here. You saw that spike, you saw it recover back above, you took a long at 28.70, let's say 28.73 against that low. Well, at that point, now you got to look for levels on the upside. And if you do that, you see the 618, the key Fibonacci ratio of that decline comes just pips from where we turned. That's 28.94. So that'd be your first target on the upside. You'd look to do something there, take some off the table, go break even or better. If you don't have a positioning right now, this is where you're looking for possible exhaustion. Okay, if SPX is going to break lower, this is kind of where you want to see failure into that 29 region. And then obviously a break below 28.71, you know the downside targets. But there's a lot of different ways that you can attack it. Does that make sense, Abby? And that's the beauty of why I find these sessions so great for both of us, because I'll be on here and I'll be looking at a certain level, you know, Pooja or Iman or Ty or Pete will say, well, I'm looking at this, or I'm short from here. It's just there's a lot of different ways that we can play. You just got to make sure that you're always in a defensive stance. Whenever we're near-term trading, you know, you don't want to get carried away. The biggest propensity is that people will start to chase. And they'll start to say, oh, it's a near-term position, I'll just jump in here. That's the worst type of thinking. In fact, when you're near-term trading, guys, that's when your risk to reward needs to be even tighter. Okay, so pick and choose your entries here, but I think the levels have been pretty clear. And again, I haven't actively traded SPX in like years. So it's just, I find this so funny every time I wake up. The levels are just like ping pong. It's like no one's business. Look at this formation that we've been in for, I mean, this is unorthodox pitchfork even, but man, it's been ridiculously clean. Ridiculously clean. So hope that helps, guys. A little bit of a breakdown there. Abby says Abby is cool. He says, got it. Yeah, I haven't learned the expensive way. Don't chase price. I have learned. Oh, he says the expensive way. Yeah, you know what, Abby? I'll tell you what. I can tell that to 50 new traders, and 49 of them are still going to have to learn the expensive way. Okay, don't feel bad. We all learned the expensive way, unfortunately. But for anyone out there who hasn't, hear wisdom from people who have done this before. Yeah, chasing is you know, obviously one of the main problems that a retail trader will fall into. Okay, so that's SPX. Next up, real quick, I just got two more things I want to cover real quick. Is crude. Here's crude prices. Listen, the you know, the headlines are going to be the headlines. I got faked out. Okay, this break yesterday below the 52.20 level. This was our near-term bullish inval. If you remember earlier in the week, had me looking for a larger setback. Now, you know, headline event risk will be headline event risk. Here's the last update on crude. This was our breakout level. If you know, remember we were talking about a breach essentially above that 52.20 level. Was it 52.20 initial support? I think it's a typo there. No, 53.19. That's right. So we needed a breach above this confluence region, is what I highlighted earlier in the week. It was right at 55 to get the move. We didn't get it, right? Earlier in the week, 618 converged on that lower parallel. I thought we'd get maybe an opportunity to get long there if you get the pullback. If we missed the breakout, that was sort of the next idea. But man, when we sailed through yesterday, I just sat out on the sidelines. I thought this thing was kind of like going to get into like 47s. Obviously, again, there's some overnight news developments. Here's the breach higher. This is resistance right here, guys. It's also the initial range lows for the week. And it's a 38.2 of the range, which is still the range we're trading in. We never took out that low. So I'm inclined to look if we break 53.50 higher. That said, it's a touch and go situation here. Be very careful if you're trading crude. Last question on SPX. Abhishek, you got it, sir. What he says, on your chart in the 30 minutes, you see that two candles kind of bullish near 618 level. Should something be read by those candles, or am I reading too much? Let's go back real quick. So here's the 30-minute candle. Say what you're saying. He says, see the two candles kind of bullish near the 618 levels. So what are you interpreting as bullish candles? Like these? just before that, like these two candles, you can't say. Here's my thing, Ab. Um, I'm not a big fan of reading too much into candlestick formations. The candlestick formations, the ones that matter to me most are outside reversal candles, dojis, obviously is market indecision at a key level, spinning tops or spinning bottoms or hammers, things that are a little bit more attentive, but I don't put any emphasis on those on the near term charts. Now, if you're looking at the near-term chart and you see a massive outside reversal like this was, right on a 30-minute close, you would have known already that this was going to tank because of how it reacted with divergence. You had a very clear-cut trigger support break here. Okay, 3-point support break, and you had an outside reversal off Fibonacci resistance in the yearly open. So again, this is why I turned your attention lower early in the week, because we saw that even on the near term, you got a 30-minute reversal. But candlestick formations, in my humble opinion, Abhishek, are most useful, are most telling on the daily charts, and even more so on the weekly. But you start to get into 30-minute, 10-minute, 5-minute charts, you're going to see outside reversals, dojis on every other candle. You're going to be sitting there flip-flopping all over the place. So that's just my opinion. I don't put too much emphasis on real intraday formations unless they're expansive, which means, a doji, which is giving you a clear-cut range to look for a break, or an outside reversal, specifically when it comes off a key level. Does that make sense? Daily or weekly, then SPX weekly is killing bullish. Let's see what the SPX weekly here. Yeah, I mean, this is so Abhishek, you're like reading my mind. So this is we highlighted this on Monday. The fact that this thing made a reversal, outside weekly reversal off of swing monthly, multi-month lows, and that did leave the risk higher, momentum coming right, back above 50 on the pop here. So my point being is you want to take that with a grain of salt, because at the end of the day, Abhishek, what are you going to do? You're going to start off this week and just go long and good luck because there was an outside reversal. That's why these things for me are telling, but they're not necessarily prompting a trade, right? It's not necessarily prompting me to operate on a position just because an outside reversal. It has to be, that's a tell, an added factor to something that we're seeing in price. Does that make sense? So the fact that outside weekly reversal took us through resistance, took us through channel resistance, through lateral resistance, that in combination shifted the focus higher. Now we jump into the near-term charts to actually look where to execute. Good questions. Good questions. I hope that helps, Abhishek. Last but not least, I talked to you guys. Someone was asking here. Hey, you're more than welcome, sir. You were asking here about silver. I'm not sure who was the questionnaire, but here's something I was looking at. Abhishek, it was you. Okay, right on. So here's something I was looking at, man. I mean, so I think Jamie's looking at this same sort of consolidation, wedge pattern break, whatever you want to call it. It's not quite a channel. They're not parallels. The breakout. The ideal play would have been to look for the pullback into 1455, 1460 for support. Now, that's not only the 618 retracement of the advance, but it's also the monthly open, the objective monthly open, the objective monthly opening range low, okay, and just below that is that former slope, which should be resistance. So I'm inclined to look for a bounce off of lower levels to play the subsequent move higher, and I think you get 1525 at some point. So here's the intraday chart, though. So, on this one, kind of the larger, further out you go, a little bit cleaner. But this was the pitchfork that we added when we just looked at this briefly yesterday. The 50 line has been decent support. If you take another basic slope support off just these two lows from May, on a closed basis was held, and that converges basically on that same 50 line. So I'm inclined to think you see a new low on this recovery. 1495 is where I would look for failure for breaks higher, but really the big level 1460, 1440, 1455, excuse me, the monthly open, and that 618. Both levels of interest if we break lower for possible support. Obviously, the 15 break would put us right back on resumption. Longer term, I'm bullish. Short term, I still think it could make another stab at a new low just to complete some sort of series before resumption. Does that make sense? Abhishek says, I love that. I was thinking of that level in the near future. Note and gold will most likely come down as anticipated. So yeah, I'm with you on Abhishek. I'm of the same mindset with both of these at this point. Okay. Guys, I have to wrap it up there. Don't forget, Jamie's going to be up in just a little over an hour and a half, a little under an hour and a half for the midweek strategy webinar. Best of luck trading, guys. Watch tomorrow's release for U.S. retail sales, probably the major last event risk of the week. And that's it. I'll wrap it up there. Best of luck trading, guys. Have a great weekend, and I will see you on Monday morning on Daily FX for the weekly strategy webinar right back here on SB Tuesday and Thursday. Cheers.